In this video, we're going to we're actually going to do a bank reconciliation. Now, a bank reconciliation is probably the single most important internal control mechanism for the control of cash that exists in any business. All businesses do them, probably do them monthly, sometimes even more often, and should be kept on top of because cash being what cash is, internal control is vitally important. So we're actually going to do the bank reconciliation for Video Busters from the textbook, which is from pages 454 to 457. So the bank reconciliation has been prepared periodically, and it explains the difference between the cash reported on the bank statement and the cash reported in our books, sometimes called the balance per books or the balance per the general ledger. So we'll prepare that bank statement. We're talking about October 31st, 2011. So if you take a look in the textbook, you'll discover that the bank statement from National Bank says Video Busters has $2,050 in the bank as of October 31st, 2011. But when we look in the general ledger for Video Busters, it says it only has $1,404.58. And the question is, who's right? And the real answer to that is probably neither one, because some items on the bank statement haven't been recorded in our general ledger yet. Also, we may have recorded things that the bank doesn't know about yet, and that's what a bank reconciliation is all about. So what kinds of things are we talking about? Well, on the bank statement, we have things called outstanding checks. That is a check we've written as a business that the bank doesn't know about. It's still outstanding out there in the world somewhere. We could have deposits in transit, or if you think of it as deposits outstanding, but we refer to them as deposits in transit. That is, we've deposited the money, but that hasn't shown up on our bank statement yet. Now that should happen fairly quickly, you would think, but sometimes there can be a delay of a day or so in getting deposits recognized on the bank statement for weekends and all those kinds of things. Or the bank just may have messed up some way. They may have made an error, and boy, we'd sure like to find out about that, because if in the fine print of a bank statement it says, if the bank makes an error, but you don't find it soon enough, too bad. They just carry on. So if it's in the bank's favor, they carry on. What's interesting, if it's a bank error but it's in your favor, they can correct it whenever they want. Banks have kind of got the best of both worlds there. From our standpoint, what kinds of things could be on the bank statement that we haven't recorded yet? Well, things like non-sufficient funds checks. That is, checks have been returned to our bank because whoever wrote the check didn't have enough money in their account to cover it, and so the bank gets their money back from us. Like I said, the banks have got themselves covered. They might have us charge us some service charges for providing services for us, and of course interest. We might earn interest on our bank account, although to be fair, most business bank accounts don't earn any interest. The bank, in some cases, can actually do collections for us. They might be in the business of actually receiving money from our customers directly rather than having it come to us. It goes directly to the bank, and then the bank records that and lets us know. And the other thing, of course, we can catch is when we perhaps have made a mistake. Although we're really good and we rarely make mistakes, it can happen, and a bank reconciliation will help find that. So what you're going to actually do is throughout the process of this video, you should be completing this form. Now, this form is available on the course website, and if you don't have it yet, just pause the video now, go off to the course website and print that off, or you can just make one up, take a few minutes and just draw one up that looks like this, because all bank reconciliations look like this. I'll wait for you. Okay. So now you have the form, and we're going to go through the, like I say, the exercise of the textbook. I'm going to take you through it step by step and try to explain how things are happening. It'll look a little different here than it does in the textbook, but essentially it's the same problem. So, remind you of what we have. The bank statement that shows a list of all the checks or debits, reductions of our bank account that the bank did. Some of these we know about already. They're checks we wrote, and of course we expect our bank account to go down, but there could be other things. And this is a list of all the deposits or all the things that increased our bank account. That's from the bank's point of view. We also have been provided in the example a list of all the deposits we made in the month and all the checks that we wrote in the month to try to figure out what's what. So what we need to figure out is which things are in both places. So we typically start with the deposits, normally because there's fewer of them. And so we go through the deposits and try to figure out which deposits that we've recorded has the bank recorded. So anything that's in agreement, that's in both places, we just kind of check them off or highlight them or indicate in some way that they're in both places. So in this case, these items appear on both our records and the bank statement, and therefore none of those items is a reconciling item. A reconciling item, remember, those things that appear one place but not the other. Okay, so we're good with that. We don't have to worry about those things. Tick them off. All right, so let's take a look at the disbursements then. Here's a list of all the checks we wrote, and can we find them on the bank statement? Well, we can't find them all, but all the ones we do find, we kind of check off, leaving the things on the list that checks that aren't on the bank statement, and there's also some things on the bank statement that weren't on our checklist. And so those are the things we're going to have to be concerned about. The things that are highlighted, again, they're in both places, so those are not reconciling items either. It's the things that aren't in both places that are only in one place but not the other. Okay, so what we're left with then is this cash receipt of $145 that wasn't on the bank statement. We're left with this credit memo for $485 and this for $4.82 that was on the bank statement that wasn't on our list of deposits. On the checks or reductions of bank account side, the bank has reduced our bank account for a total of $20, $40, $53 that we don't have any record of, but also we've written some checks that the bank doesn't know about yet. So how does this all show up on the, they're all reconciling items. What does that look like when we actually put it on the bank reconciliation form? So the statements, the items that show up only on the bank statement are reconciling items on the book side. So these are things we didn't know about. Remember, our balance on when we looked at our bank balance was the $1,404 and change. But we had not recorded any of these things yet. So these are reconciling items for us. Our 1404 was wrong because we haven't recorded these things yet. So they're reconciling items for us. Things on the bank statement that we don't know about go on the book side of the bank reconciliation. Okay. And here's what that looks like. So on one side of that form, it says the balance in our books was $1,404.58. This $485 is explained in the textbook, but basically it's $500 that we received, the bank collected on our behalf and charged us $15 for doing that. So they've put $485 in our account, which is essentially the $500 minus the $15 service fee. And the interest that we've earned ends up in this area. So those are increases to our bank account that we didn't know about, so we need to add them into our bank account on our side of the equation, on the book side of the bank reconciliation. Also, there were some reductions of things, and again, these are explained a little more clearly in the textbook. So the $23 is a check printing charge, it turns out. So it charges us $23 to print up a batch of checks for us. And this $30 is an NSF check for $20 plus a $10 service charge because the bank finds that really annoying and they charge us money whenever they have to handle one of these things when we get a bad check. So that's a $30 reduction of our account. So again, we didn't know about that. We need to, so our balance was $1,404 plus the stuff the bank put in our account minus the stuff the bank took out of our account. And so our balance really should be $1,845. We thought it was $1,404, but once we figure out all this new stuff, the balance ends up being $1,845. So that's the on our side, but that still doesn't agree with the $20.50 that the bank says is in the account. So we're not quite home yet. So the balance then of our book side, $1,404, found its way up to $1,845. So what about the other side? So on the bank side of the bank reconciliation, this is where we keep track of those things that were on our books that the bank didn't seem to know about. They hadn't arrived, things hadn't arrived at the bank and they hadn't recorded those transactions yet. And you'll remember when we went through, the bank knew about everything we'd recorded with the exception of that deposit of $145 and these two checks. So what does that look like on the bank side of the bank reconciliation? On the bank side, we start with the opening balance of $2,050. And if the bank had known about that deposit, they would have increased our account by $145 and our balance would have been $21.95. Also, if somebody had actually shown up with those checks, and they will someday, hopefully soon, they will take the money out of our account, the bank will, and reduce our balance to $1,845. So basically, if they had known about all the things that we had done and had updated their records, they would have reported a bank balance of $1,845. Just a second. that looks really familiar. That was the number we got on the book side of the bank reconciliation, where we were keeping track of what our balance in our books would be if we recorded all the things that the bank had on their records that we didn't know about. Now, the bank isn't going to change their records. They'll update when people show up with deposits and checks and when they do things, but we'll need to update our records. But we both agree that if we had done everything we were supposed to, that our balance would have been $1,840. Not the $2,050 the bank said, not the $1,400 and change that we said. The real bank balance, the reconciled balance, is $1,845. So we're going to take a look in another video at what the actual journal entries that we might have to make as a result of doing this bank reconciliation and discovering new information. But like I said, that's a subject for another video.